addition, yesterday we achieved a total reset with China after productive talks in Geneva.
Consensus from both delegations this weekend is neither side wants a decoupling. And what had occurred with these very high tariffs, as Ambassador Greer said, was the equivalent of an embargo.
Welcome to GBS Deep Dive. I'm Najma Minhas. The high-stakes tariff war between the United States and China has, for now, given way to a fragile truce. After intense negotiations in Geneva, both sides agreed to an unexpected, dramatic 90-day rollback. China slashed tariffs from 125% down to 10%, and the United States has dropped it from 145% to 30%. But behind those smiles, battle lines are being redrawn from AI chips to rare earths. Is this détente real or just a tactical pause before the next escalation? With President Trump preparing for a Middle Eastern tour to court investment and the IMF warning that the trade war could tip the global economy into recession, this deal may be less about resolution and more about damage control. The game of chicken has ended, thank God, as this weekend's talks resets the tone between the United States and China from outright conflict to constructive engagement, for the moment at least, diffusing the trade war that threatened the world's two largest economies as well as global trade. Economists had warned that the trade dispute would have slowed global growth, fueled inflation, and created product shortages, and potentially would have tipped the United States into a recession. The IMF's own World Economic Outlook report projected that the global output would slow down to 2.8% this year from 3.3% last year. In a joint statement released on Monday, the United States and China said they would suspend their respective reciprocal tariffs for 90 days and continue with negotiations that they started this last weekend. The United States side was represented by Treasury Secretary Scott Bessent and the U.S. Trade Representative Jamieson Greer. And the Chinese side had Hu Lefeng, China's vice premier, who also manages economic policy. Under the agreement, both would reduce their tariffs by 115%. The United States would reduce the tariff on Chinese imports to 30% from its current punishing 145%, while China would lower its import duty on American goods to 10% from its current 125%. To explain the 30% the United States is charging, it's basically the 10% being charged universally across the world, plus the separate 20% tariff that the president imposed over what he described as China's role in the fentanyl trade. Now, tariff rates are close to where they were before President Trump ratcheted them higher on April the 2nd, the so-called Liberation Day. What also remains, though, is the U.S. duties on steel, aluminum, and autos around 25%, as well as some of the earlier tariffs imposed on Chinese goods during President Trump's first term in office, as well as those that were imposed under President Biden when in office. More importantly for the United States, China has said it will suspend or revoke the countermeasures which it adopted in retaliation for many of the escalating tariffs. Now, these included those restrictions that they set on the export of rare earth metals and magnets, which are critical components that are used by many American industries, including automakers, aerospace manufacturers, and semiconductor firms. Global markets jumped on the announcement. The benchmark index in the Hong Kong surged 3%, and about the same amount surged in the S&P stocks as well. And the price of gold fell as investors felt less need to buy something safe. Outside of markets, geopolitical watchers noted that countries like Vietnam, India, and Mexico, who had been quietly benefiting from China's isolated trade status, they now see that their window of opportunity is narrowing. Meanwhile, European officials have welcomed the truce but remain very skeptical about its durability, and they've cited broader concerns over US trade unpredictability. So what was agreed? Who blinked? And why this moment may echo the rivalry that once led to Britain and Germany from trade to World War I. If you think that the United States and the China trade war is over, think again. So who won? Donald Trump is due to visit the Middle East this week, and sources speaking to the media said that he'd been looking for an off-ramp from its trade war with China before he left. Now, he wanted to ask for more investment from the Arab countries and did not want this economic uncertainty hanging over him as he visited the region. And it doesn't look very good to be in a trade war with their top trading partner either. Now, as talks began over the weekend, an influential Chinese blog, Yuan Tanxian, published a cartoon of Besant rushing to Switzerland, pushing an empty shopping cart while he's doing it. And it basically indicated the desperation on the US side for talks. Now, Chinese blogs over the past several weeks have created cartoons showing that Americans or President Donald Trump are desperate to receive the call from President Xi. However, officially, the Chinese side has been smart enough to portray it as a win-win, with both parties meeting halfway. China's Ministry of Commerce has said that the agreement was in the interests of both countries and the common interests of the world, and that it hoped that the United States would continue to work with China to meet each other halfway. Both sides needed this, and there is no doubt that the initial bluster from the White House and the tough reciprocal pushback from the Chinese suggested that it would have been difficult for both parties to come to an agreement, as said by Ambassador Jameson Greer.
It's important to understand how quickly we were able to come to agreement, which reflects that perhaps the differences were not so large as maybe thought.
However, the step back has been welcomed by most global partners as well as the global markets. I would love to get your thoughts on which countries you think may have not been happy with the United States and China making up faster than they would have expected. Who do you feel was going to jump in and take advantage of China's pariah trade status? Anyway, coming back. The Inspector General of the World Trade Organization called the talks a significant step forward and urged both countries to build on this momentum. Both countries were hurting as economic data in recent weeks had started to show a downturn. Chinese businesses, especially those dependent on exports to the United States, were coming to a standstill. Factory output has slowed, and there were reports that some companies were having to lay off workers as production lines of the US-bound goods ground to a halt. China's consumer price index dropped by over 0.1% in April, the third month in a row of decline as consumers hold back from spending and businesses drop prices to compete for customers. Economists estimate that even these 30% tariffs will lead to a 36% decline in China's exports to the United States over the next 12 months. In the United States, economic data was similarly bad. It was showing that shopkeepers were panicking. Retailers in the United States were warning of empty shelves if they couldn't get their Chinese products. And some small businesses were worried they would go under without this easy access to Chinese goods. In the first quarter, the United States gross domestic product contracted at a 0.3% annual rate. The IMF has projected that the United States growth will slow to 1.8% in 2025. And this is down from 2.8% last year. And only as recently as January, it was predicting that the United States would grow at 2.7% this year. Similarly, due to the tariffs, the fund has raised its inflation forecast for the United States to 3% from 2% this year. And while it's not projecting a deep recession in the United States, it has increased the risk of a downturn from 25% to 40%. Due to the tariffs imposed. And tariffs are not the only thing creating risk for the United States. As Donald Trump tries to upturn the whole existing status quo, the country faces economic risk from many other recent White House moves, including the immigration clampdown, government funding cuts, and the layoffs, and the resumption of student debt payments. All will help to weaken the growth of the country. Will this trade deal last beyond the 90 days? Well, given the topsy-turvy nature of policymaking with Donald Trump, and after what happened with Mexico and Canada, when the tariffs that were paused for 1 month and then reinstated, there is the fear that the same will happen with China. But it's not likely to happen. Donald Trump has already said that even if no deal is arrived at within the 90 days, the tariffs on Chinese imports are not going to go back to 145%. but are more likely to stay around their existing 30% level. I think you will have a deal, however, he has said. A trade deal is very likely between the two countries. President Trump has said that he's expecting to take a call with President Xi later in the week.
Very happy to be able to do something with us. And the relationship is very, very good. I'll speak to President Xi maybe at the end of the week.
The basis is likely to be the trade deal that Donald Trump did in his first administration, which was basically based on an increased Chinese purchases to reduce the trade deficit between the two countries. Scott Bessent has already said during the rundown of the trade talks that the two countries may discuss purchase agreements of American goods by the Chinese government. The problem is buying American genetically engineered corn, soybeans, or hormone-pumped chicken or beef will only go so far to reduce the deficit. What China wants, which would really reduce the American deficit, are high-value products that the country offers, such as AI or chips. Exactly those products that the United States no longer wishes to sell to the Chinese due to national security reasons. More realistically, China may look to significantly increase purchases of US LNG, agricultural products, commercial aircraft like Boeing jets, and potentially expand market access for American financial firms. While not enough to close the deficit entirely, they offer politically safe wins for both sides, which they could package as being progress. Now, any trade deal discussions would also consider China's management of its currency and its subsidies. Now, these are all areas which Beijing could negotiate on. Now, furthermore, the 20% tariffs which are due to fentanyl is something that Beijing can definitely look to work on. The Chinese equivalent of the fentanyl czar was said to be present at the current trade talks during this weekend as well. Now, one anecdote shared from the talks said that Scott Bessent picked up a grain of sugar and said this is enough to kill one person. And then he picked up a couple or more to say this can kill everyone in Geneva. And apparently that had a big impact. The Treasury Secretary Scott Bessent has stated that the consensus from both delegations is that neither side wanted a decoupling, and that the tariffs had started to act as an embargo, which was not the intention. But is that true? His MAGA supporters like the idea, and Donald Trump and his supporters have been talking about decoupling since his first administration. In June 2020, President Trump first used the word decoupling and said that the United States certainly does maintain a policy option under various conditions of a complete decoupling from China. Even his Treasury Secretary at that time, Mnuchin, acknowledged the possibility of decoupling, stating that there will or there may be a time when we have decoupling. That's something that the president may consider. Even the Biden administration started using the term until they very quickly moved back into saying de-risking when some of those consequences of decoupling became clear. Now, this time around in Donald Trump's second administration, he has Peter Navarro, his senior trade advisor, who is a prominent advocate for America First nationalism and reducing the country's reliance on China. However, with tariffs at 145%, it became very quickly clear that it was in essence decoupling and that the American economy wasn't ready for it, assuming that it's never ready for it. Now, what they will now do is move once again back towards selective decoupling, targeting those areas where dependency on China poses a risk to national security or economic resilience, such as the chips or the pharmaceutical industries. The last time the world saw a similar situation to the one we are witnessing right now between the United States and China developing was in the decades leading up to World War I, when Britain and Germany were locked in an intense geopolitical rivalry despite being deeply economically intertwined. Germany had rapidly industrialized and emerged as Europe's leading manufacturing power, exporting heavily to Britain around the world and receiving significant British investment. The two nations were at each other's major trading partners, yet this economic interdependence failed to restrain their growing strategic mistrust. Germany's naval expansion, colonial ambitions, and challenge to British global supremacy triggered alarm in London. Nationalist fervor, alliances, entanglements between countries, and an escalating arms race eventually overwhelmed all that commercial and economic logic. Now, despite their trade ties, Britain and Germany descended into World War I in 1914, proving that economic interdependence alone cannot prevent conflict when strategic competition dominates. Coming back to now, Scott Bessent, after the trade talks, came on to American media and he spoke of a strategic decoupling, targeting sectors which were critical to national security, such as semiconductors and pharmaceuticals, AI and defense technology, while maintaining broader trade where the United States remains dependent on China, for example, on consumer goods and some rare earths. Now, China is still the United States' nemesis, and the US sees it as its primary strategic rival and a threat to its global hegemony. It's a systemic threat to that US-led global order, militarily, technologically, and ideologically. That recent conflict that we've just seen between Indians using the French Rafale fighter jets and the Pakistanis using the Chinese J-10Cs with those PL-15 missiles would not have helped to reduce United States comms. Yet, disentangling economically from China is proving to be very complex due to the deep integration of the two economies. China's also realized the areas where it's weak, such as those Boeing planes it really needs, the aircraft parts, and chips still to date. And it will also reduce its dependence on the United States. However, at the same time, they realize, as pointed out by the Global Times, that the route to avoid confrontation as two powers over time is when more American companies achieve greater success in the vast Chinese market, when more Chinese enterprises bring more job opportunities to the United States, when the list of cooperation between the two countries grows longer and the cake of cooperation grows bigger. The value of dialogue rather than confrontation between China and the United States will shine brighter and brighter. The two countries can well help each other succeed in a race to the top and both develop themselves and prosper together on this vast planet. History also offers us the 19th and early 20th century UK-USA rivalry example of a peaceful power transition, where Britain gradually accommodated to the United States' rise without direct military confrontation, shifting from a rival to a strategic partner. If the US and China can institutionalize guardrails and find overlapping interests, this model, though difficult, could offer a path to avoid conflict. Share with me your thoughts on how the two countries can off-ramp from their existing collision path. Do share the video and subscribe, and have a great day.